AMG family, Mondo here. Hey, just wanted to make sure real quick before we get started that you guys have subscribed to the AMG Podcast channel. Go below if you can't see it, look a little, scroll down, whatever you got to do. Hit that subscribe button. It helps us immensely here at the AMG Podcast. The second thing we need you to do is turn on your notifications. That way, anytime we drop new content, you are the first to be notified. That way we can grow together. We can learn in life together and do life together. All right. So with that said, let's get to it. All righty, what's up, everybody? It's the AMG Podcast here, another day with the fellas. Here to talk about some good stuff. We're going to review a video that we've all seen. Most of you, if you're on TikTok, Instagram, whatever, you may have seen it as well. But today we're going to have some fun, man. We're going to have some fun, talk about a few things in regards to life insurance, cash value, information, borrowing against policies, how to leverage these things and all that. We may affirm some things, we may debunk it. But we're going to tell you our truth and the truth that we know and what we've learned over the years. So what's up, fellas? What's going on, man? How y'all doing today?
What's happening? What's happening, everybody?
Hey, slow motion, brother. Slow motion. I like that hoodie, man. Hey, the Mamba. I like that, man. That white's kicking, bro.
Feeling a little aggressive today.
I feel you, man. I love it. I love it. And we got our boy Trav, the Brad Pitt man over here, the model of AMG. What's up, brother? What's going on?
That's crazy.
How are you, man? You doing good?
I'm good, man. It's a great Tuesday. Yeah.
Yes, it is. Mm-hmm. Yes, it is. Prepping for a lot of food and comatose.
That's right.
Yes, indeed. Yes, indeed, man. So it's going to be good. We're going to have a great conversation. Take notes if you're watching this, guys. I'm sure you're going to have some questions, and feel free after you hear this discussion, if you want to reach out to us, definitely DM us, hit us up at our any of our calendars, channels, whatever, DM and let us know that you want to have a conversation and ask more questions. All right, so AJ, what you got on deck, man? What we going to get hit with today?
Yes, sir. So this is something that we found on good old Instagram, and let me see if I can make it a little bit bigger. There you go. And let's see what they're talking about.
All right.
You don't need a job anymore. 50 grand a month is about to be your new normal. And the reason I know this is because I'm about to let you in on one of the biggest secrets that wealthy people have been gatekeeping from you for the longest time. You know what a trust fund is, don't you? When you think of a trust fund, you think of wealthy people that use it to protect their assets so they can pass them down to their kids. But did you know that it's not only wealthy people that open trust funds? People who are broke open trust funds, and they use them to become wealthy. And now you're probably wondering, how do they do it? Well, I'm about to tell you, so make sure you save this video. So you open up a trust fund, which anyone can do, and then you buy an asset to put inside that trust fund. And if you're thinking, well, I don't have an asset to put inside the trust fund, what people will do is they'll just go and buy a life insurance policy to put inside the trust fund. Life insurance policies are very inexpensive, and they're accessible to almost anyone. You can get in $1 million policy for anywhere between $100 to $200 a month. So if you were to buy that $1 million policy and put it inside your trust fund, that would bring your trust value to $1 million. And then you do what the ultra rich do all the time, which is borrow against their assets. People like Jeff Bezos and Elon Musk, they don't just have billions of dollars sitting in a bank account. Their wealth is tied to their stock. So whenever they need money, they just go to a bank and they borrow money and they just use their stock as collateral. And you can do the same thing with your trust. Because you put your life insurance policy inside of your trust, you can now borrow against the value of that life insurance policy. Now, if you borrow the money, you can do what you want with it. But the smart people, they use it to go invest and buy businesses. They'll go out and buy small franchises. They'll team up with other investors and go buy things like apartment buildings and other commercial real estate. And once they start collecting profits from those businesses, they'll go back and they'll pay off the loan that they used to acquire those businesses in the first place. And once they've paid off their debts, they're now financially free and can start building generational wealth for themselves and their family. And this is just one of the many ways that people become wealthy that we just don't know about. So if you're that person that looks around and wonders, man, how do people get so rich? This is one of the ways they do it. You don't need a job.
All right. All right. He made me break out the pen, AJ. I was like, okay. I might have to watch that one more again, as my uncle would say. Okay. All right. So I know that a lot of people watching this is like, oh, is that true? I had someone actually email me or DM me about this particular video, and they were like, "Man, is this real? Is this true?" Out of the gate, what struck you? What's the first thing he said? Woods. He said, first thing out of his mouth, "You don't have to work anymore. You don't have to get a job, or you could whatever."
50K a month is your new standard.
That is clickbait if I ain't seen it.
Man, talk about trigger words.
Triggering. I don't have to work no more. Man, we listen to this dude. He knows something. He preaching. So I don't have to work anymore. Okay.
Yeah. Well, my first question is he working? And where's he at?
Bro, great question. Great question.
Because if he's really on game, then I'm assuming he's, got a trust with $1 million policy in it. He's borrowed against it.
Yeah.
And he bought a couple of properties.
What would you say, like percentage wise, like he's correct by what? What percentage? He's correct by what? 70%, 50, 80, 90, 20. What would you say?
So like conceptually, what he's saying is right. The deliverables and how to go by it is completely wrong. So I guess in that case it's 50-50. I'm assuming. So like
Okay.
from a bird's eye view, if you just took out all the things that he was saying, but talking about, open up a trust fund, protecting your assets and securities, talking about how the ultra wealthy borrow against their assets. All that stuff is true, but the way he is presenting it is like completely false. Like,
Okay. All right. So you give him a 50 piece. All right.
Yeah.
What say you, man? What do you get this dude? Uh-oh.
Yeah, I was
Down.
on mute, my bad.
There you
So
go.
I'll give him a 50 because
Okay.
he's presenting it as an overall, first of all, you don't have to work anymore. 50K is your new norm. Well, how you gonna get 50K?
Right.
And the detail of the insurance policy is way wrong.
Yeah.
Half of it is right, half of it is wrong. Yeah, that $1 million policy has to have some value.
Right.
Not just a death benefit.
Yeah, it
Yeah.
has to have some cash value.
Exactly.
So, yeah. So
Okay.
I'll give him a
So
50 piece.
you give him a 50 piece? Okay. Trav, what do you give him?
The theory of it, 75.
Okay.
The delivery, 10. Because, a $100 to $200 policy isn't gonna get $1 million death benefit, first of all.
Not in a cash value
Not in the cash
contract.
value, yeah.
No. Yeah,
No.
but not even, but even the $1 million death benefit wouldn't be there, first of
Right.
all. But the death benefit isn't going to be the collateral that he's talking about with a trust
Correct.
that you would borrow against. That doesn't exist. That part doesn't exist. So he loses a lot for that. But the theory of it, yeah, he's on point with the theory. Just that he needs to meet with his financial advisor to get the details right. So if we can find him and we can get a consultation, we can try and we'll work through the details with him since he has the idea.
One of my things is, I wonder if he actually knows, but just puts this type of content out there because it's for people that are chasing that lottery mentality. He knows that it garners views because it's a simple life hack or financial cheat code.
Right.
You know what I mean? So like, I wonder if he actually knows what he's really talking about, but it's just like, I don't know. But us as professional licensed, I wouldn't want to discredit my name to other people that are in the know to try to garner views. I don't know. It's such a catch-22.
Yeah. And there's a lot of people that like you guys said, take the bullet. So let's talk about the 50. Let's cut it in half then. The 50% that he's correct and the 50% where he's a little off base, in our opinion. All right. So let's talk about what's correct. Let's talk about that first. Just for those who are listening, what's correct? What did he say that was right? So in my opinion, where he was correct is that yes, the one strategy is to get a trust, right? Trust fund, a trust contract. Okay. Tomato, tomato. right? So get a trust contract and start putting your assets within the trust. He's right there. Would y'all agree?
Yeah.
Correct.
Can I just put a little caveat in there too?
Yeah.
So one of the contexts that you put is like, oh, even broke people get trust. So if you think like to open up a trust, you still have to pay. Like it's still a legal binding contract. You have to have someone set it up. You have to have legal documentation. So if you're in the if you have the connotation thinking that, oh, I could just go down to the courthouse and set up a trust for free. No, you still have to pay to get everything legalized and documented.
Yeah, and I've seen over the years that there's not a hard cost, but I've seen anywhere between $2,500 up to $20,000 for a trust, depending on where you go, who's hooking it up, how many assets you're transferring, all the kind. I mean, I've seen it's a wide range. So to your point, even if you're broke, you can get a trust. Well, I don't hear broke people throwing around $2,500 plus 20 grand. So to your
And
point,
that's not including the assets.
and that's
The
not including
assets
assets. That's just getting the trust.
The
Exactly.
cost of the trust really is. Yeah.
Right. So I guess this is good, AJ. I guess we got to do 50-50 at the same time, like the good and maybe the challenge.
Well, we'll say though that the good news is though, and I don't know if he knew this or not, but now there is a more affordable option through Ethos.
Yeah.
And for any financial professionals who have been appointed by Ethos,
right, you could do
there's a more affordable option, but to do it for free, I haven't personally seen anybody set up a trust for free.
And if you do, uh-oh.
Get a review.
You're right.
Uh-oh.
Get a second review.
Right. Yeah. All right. So we got that part. Set up trust fund up. All right, cool. Or trust contract and transfer assets in. So regarding one asset, the life insurance contract, number one, he's kind of convoluting the two. He's like, yes, life insurance contract. Question is what kind?
Yeah.
Mm-hmm.
That's the big question. So people hear you get a life insurance policy, and then here's the misleading part to me: $100 to $200 a month is going to get you, $1 million. Timeout. I did an illustration yesterday for someone for $100 a month on a kid, a 4-year-old. Death benefit was nowhere near $1 million. Okay, on a permanent life insurance contract that builds cash value. Okay, now if you were to take that and turn it around and get $100 on a term policy, right, guys?
Yeah.
On that same child, you're gonna have a few million.
Especially short term, like
on traditional straight term, right? So I agree with that. You guys agree with that? Permanent life insurance, you can put that into the trust, all that kind of stuff. One thing that I found, here's what's interesting. Here's what wealthy people do, right? They borrow against their assets, like you said, AJ. That's true. But where was he off with that part, though? That is true. People borrow against their assets, right? And typically, what these guys are doing, let's get it correct though, too, because it is different. When you're leveraging a life insurance contract and you're borrowing the cash value, leveraging the collateral and the death benefit. So you're not borrowing necessarily from the lump sum total of the death benefit and you have access to that. No, that is covering the collateral. That's covering what you loan out of the cash value.
Correct.
So if you have $1 million death benefit, you can't go get a $500,000 loan. Okay, you got to look at the cash value column and you can get a certain percentage out of that. Typically, you don't want to take out more than 90%. He didn't say that either.
Yeah.
Okay. But again, there's so many dynamics to the design of it though.
Yeah.
Right.
So actually, let's quickly break that down for people that are just hearing that and this is like, what do they mean? So let's just say, for instance, guys, you have a whole life contract. And let's just say you have a cash value built up of $10,000. And we're just going to use, simple math, simple just to keep anything that complicated. So let's say you have $10,000 of cash value built up, but you have a $50,000 death benefit. And let's just say you have the ability to pull all your cash or the cash value as a loan. So let's say you borrow that full $10,000. And let's just say, for instance, over the course of your life, you never paid back that $10,000. And then one day you end up passing away. Instead of your family getting the full $50,000, that's your death benefit, what the insurance company will do will actually take your death benefit as collateral. So then they see that you have a $50,000 death benefit. They see that you owe $10,000 and as a loan, what they'll do is they'll take back their $10,000 and give your family the 40,000. That's how it works as a like on the basic surface level.
Right. Okay. Now, what he described and with Jeff Bezos and Elon, that's a different type of a model. Those are called LTV loans, loan to value. That's a completely different ballgame. Now, where it is similar is that they're leveraging the value of their account.
Yep.
Right. In typical LTV loan, if you've got $1 million in stocks with Tesla or whoever you've got, and you go to the bank and you qualify for LTV, it's typically going to be 80, maybe 85% loan amount to value. They're not going to let you borrow the full $1 million, but you can get 800 probably. Right. So it's a little different. It's got some similar things. You're leveraging the value, but it's not a life insurance contract. It's a completely different vehicle. Let me ask y'all this, man. Like what I find is IULs, whole life even, and then you got term over here. Term to me is like the basic of the cars, right? It's like your basic, Chevy Cavalier back in the day. You remember that? Remember that joint? It's your basic Corolla, whatever. It's real simple. When you get to the permanent life insurance, specifically IULs, variable universal, even some whole life, some mutual contracts, all that, these are more Lamborghinis. They're customized. They have more features. They're more complicated in nature. They're for people who are looking to play at a higher level, right? And there's moving parts to it. And you have to learn, keyword, learn how to drive it. Nobody got to learn how to drive a Cavalier. You just get in and start whipping around. You need to learn how to drive a Lamborghini. In this side note, side soapbox moment, Travis. Okay. Even for insurance professionals and financial advisors, what I find is that when advisors are like, well, permanent life insurance sucks. IUL's this and IUL. Well, that's because you don't know how to drive it, homie. If you knew how to drive it and you understood the inner workings of it, and you understood how to build one and customize one for someone where it drives effectively, you can train them and teach them how to drive it, how it works, what the pedals mean, what the hand pedals mean, all this stuff. The engine is back there, not in the front, all that stuff on Lamborghinis. If you knew all that stuff, you would be a supporter of it and a fan of it. But what I find is that when you find people who are poo-pooing on IULs and that, these are people that barely know how to spell IUL, let alone know how it operates.
Yeah. Or they've seen one where somebody dropped a Lamborghini engine into a Corolla and sold it as a Lamborghini, into the shell. Because we've seen a lot of examples of IULs that just aren't built right.
Yeah.
Because the real function of the IUL, if you want to be in the Lamborghini, is that you are accessing your money and you're using that money, right, the cash value, the liquid money, for purpose.
And that's the whole point of overfunding, exactly. Right? In our design, that's the whole point of overfunding the policy.
Exactly.
You got the paid up additions, you got the overfunding. You're putting more money in than the insurance you're getting in return. So
I would say overfunding. I'll say this max funding, right? Because overfunding may
max funding. Sorry,
overfunding may trigger people think that we're making out policies, which we're not.
You're not making. Yeah, when you're max funding your policy, max funded policy, you're literally putting in as much as you can put in to keep it a tax-free contract. So you're not macking it, going to modified endowment contract. So stay within the boundaries. You want to max fund it. But here's the thing, though. A lot of the examples that we see from other people, these things aren't max funded. And they complain, well, this thing's not working like the guy on the TikTok video said it was going to work. Because whoever designed it is a Corolla mechanic.
Correct.
They don't know how to build Lamborghinis. That's why.
Yeah. So they get in front of the camera and they express themselves as angry and objective to the IULs. It's not good for you. These things don't work. Yada, yada, yada. When all the while, the salesman that sold you the Corolla with the Lamborghini motor didn't tell you it had a Lamborghini motor, or he didn't teach you how to drive it.
Perfect example right here, my friend. Perfect. some years ago. I gotta be careful on saying names because they watch this. They go, no, I'm talking about them. So
John Doe.
yeah, John Doe and Mikey. John and Mikey. Okay. John is doing well in life. Very, very well. He happens to have a Lamborghini. This is a real story now, just different names. He actually has a Lamborghini. So it's myself, John, and Mikey, and like 3, 4 other people. And John is like, hey, anyone want to drive the car? I haven't had it long. It's really awesome. You want to take it around the block? Mikey says, ooh, me. I want to take it around the block. So he starts going over to get the keys. He walks past me. I said, man, you ever driven something like this before? He said, no, it's going to be awesome. I said, man, you know they're different, right? Like they're okay. First of all, let's talk about, is it manual? Blah, blah, is it pedal? Like, do you understand how the transmission operates? Like all that stuff. Well, I mean, it's a car. Hey, man. Look, it's not mine. I'm just saying you might want to go to Johnny and ask him a little bit about how the car operates, and then especially with the what's it called, AJ? I call it hand pedals, but you know what I'm talking about. The
Power shifters.
The shift. Yeah. So, and it's like just kind of figure all that out before you start going out on the street and messing something up. Man, this dude gets in there, didn't ask any questions, and Mikey gets in that car, bro, and literally doesn't move 2 inches, trying to get out of there, and literally blew the transmission up in the garage. $30,000 transmission, just poof in smoke. I was looking right at it, watched the whole thing happen. And I'm like, now, Mikey, young guy, hadn't been in the business that long, so to speak. He never driven a vehicle like this before. The car probably cost more than his house. And no one trained him. He just got in it with no instruction, blew it up. Now, if Johnny had a Camry and he like blew it out, like, nice wheels and all tint and everything, whatever, so real nice Camry, it's awesome looking. And he said, hey man, you like my custom Camry? And then Mikey be like, yeah, let me drive it. What's the likelihood that Mikey is going to be successful, turn it on, and drive off?
Very high chance.
Very high chance. Okay. That's a term policy.
Mm-hmm.
The vehicle with the blown up transmission, that's the IUL.
Mm-hmm.
It's so crazy to see people who just got their license yesterday. Right. Last week, last month, all of a sudden trying to put regular good folks into these Lamborghinis. That's where you get problems. And then because you have those problems, that's when people get on TikTok. That's when people get on social media. That's when people get on whatever. And they start saying this, that, and the other about the vehicle. It's not the vehicle, it's the one who put you in it.
Yep.
It's not the vehicle, it's the one that puts you in it. The one that puts you in it didn't have the acumen to help you understand how it needed to be constructed for your goals and your strategies for you and your family. And they also just didn't understand the inner workings of it all. It's not just, oh yeah, you get a death benefit, and blah, blah, blah. It's got that cash value column. Well, how come it says 0 cash for 6 years? Oh, that's just part of it. Right. Yeah. That's just part of it. It's like, come on.
So that's a part of the $100 to $200 a month.
Yeah,
that's for sure. If that's where you're coming in at, because you gotta come in. Nobody goes into a Lamborghini and says, I'd like to finance this. I put about 200 down right now, and then if I can go 200 a month forever, like I don't think they'd do that deal.
Well, so
I do gotta ask. So how long did it take you to tell Mikey I told you so? Was it an immediate?
Oh, it was immediate, bro. It was immediate. After my man left, Johnny left the garage because he called his guy. How much is it going to cost? We didn't know it was going to cost 30 grand yet. That's the actual number. To replace the transmission was going to be over 30 grand. So Johnny walks off, Mikey comes in, and he got this like turned beat, red as a beet. It's like, oh man. Uh, I mean, I thought like, like it was about to be a Michael Jackson concert out in the garage because it was that smoky.
Ooh.
It was like smoke everywhere. And I'm like, oh, somebody about to start getting it. And I was like, oh, that's a blown up Lambo. Whoops.
Can we put this in here? It's kind of just like in the back of my head.
Go ahead, man. Come on. Yeah.
If you're a new agent, just got your license, I want to say to you that all life insurance products work. It's
Yes.
your clients and just the differences of people and their circumstances that don't work within the product. So, like Mondo was saying, don't go just crapping over all these different products because they're not working for you or they're not made for what people are preaching to you. Get
Mhm.
obsessed with the products, learn the products inside out, learn the actual reasoning for them and the reason why they were created and made, and then actually do by your clients and your fiduciary responsibility to make sure that the product actually works for your clients.
And nothing else to say about that one.
Yeah.
That's it, man.
Because like if they didn't work, they would be non-existent afterwards. Like like some of these products has been around now for 50, 60 plus years. Like if it
Exactly.
didn't work, they would be non-existent.
No provider would care. None.
Right. The insurance industry is highly regulated, if not one of the most regulated industries in the world. Period. These products ain't around, to your point, that long, and they're screwing people. You know what I'm saying? You literally have to be intentional. I love what you said, man. So this guy in the video,
Yeah.
we're gonna go southern on him, Woods. Bless his heart, right?
Bless his heart.
Bless his heart. Look, man. If you're watching TikTok videos and the different things and trying to learn about, like, it's cool. You got to stop it somewhere. It's like you can become inquisitive from a video and then get with a professional on one-on-one with us on Zoom, whatever, and actually ask poignant questions. And we can educate you and teach you about how it works. Okay. There's a lot of people that get in a Lamborghini. They don't know they're in a Lamborghini and they don't know why the transmission blows up.
Mm-hmm.
Okay. What we do here is we educate you on what the Lamborghini is, or even tell you Lamborghini is not for you. We need to start you off with a Camry.
Yeah.
We need to start you off with, an Altima. Okay, we can get a little fancy, go to the Maxima. Okay,
Yeah.
we get a little fancy. Or, right, you say, you know what? Now's not the time. We got to put you on a bike because that's where you are. And here's what's misleading. So this hit a nerve. Honestly, I didn't expect this, AJ. So you played this, right? Again. And I've had a few people over the last couple of weeks that have great ambition and great goals. They're awesome people, man. And I can tell they've been watching social media quite a bit. So we spend probably the first half hour or so debunking a lot of the things that they now believe is gospel about IULs and about how to build cash value wealth and all this kind of stuff. First thing we'll offer, guys, or ask you is the process of building wealth with an insurance contract and a trust, is it a microwave process or is it more like an oven or a crock pot?
Crock pot.
Crock pot is a really good way of putting it.
It's more of a crock pot. You got to let that thing cook and simmer, man. Right. And I understand now, not saying that if you have, $100 a month that you can't get one. You can get one.
But your expectations have to be lowered.
Technically, you can get one.
Mm-hmm. But that's a slow simmer.
Yeah.
That's a slow simmer. Yeah. What'd you say, AJ? You said what? It has to do what?
Your expectations have to be lowered. Like
yes.
You can't think if you're gonna put $100 in that you'd be making like 100 grand a year off of it. Like that's just unrealistic.
Can't accumulate that fast. You're not putting enough into how to accumulate that fast.
Exactly.
Well, I mean, the accumulation is on what you put in.
Correct.
It's a percentage of it, like like stocks or anything else.
Right.
You put in money, and then you're going to get an accumulation.
Right.
Of how much ever percent, 8, 12% of what you put in that you're then going to have access to.
Right.
Again, it's not a lottery, right?
It's not. Yes. It is not the lottery.
No, it's the safest way to play stocks, honestly.
Now, so to be fair, but if somebody's listening, they say, well, I don't have $1,000 a month or 12,000 or 20, 50, 100,000 to put into this thing. I understand the concept. I want to start. Can I start at $100? Yes, you can. But to AJ's point, the expectations have to be correct and understand it is a starter policy. Way we describe it, it's a way for you to get your legs underneath you, to get familiar with the concept and how it cooks over time, how it builds, get familiar with the money you're putting in, how you're positioning your $100 a month into this contract and what it's doing. You're maximizing. Hopefully, especially if it's a child, you're getting 85% of it, 80% going into cash value, the other 15 going towards cost of insurance. And we build it the right way, and you kind of get used to it. It's like training wheels.
Yeah.
Okay, you get used to it. But to AJ's point, I had a conversation literally yesterday about, hey, I want to be able to pull out, close to 6 figures in about 5 years because I got this, that, and this going on. I'm like, okay, well, before we talk about that, let's reverse it. We got to talk about your funding. Well, I was thinking about maybe about, $7,500 a month. We got time out. Okay. With all due respect, let's just stop for a second. Okay. Now, if you're listening to me after you've heard all the conversation so far, you can see that math ain't mathing. I love the hope. I love the dream. I love the ambition, but we have to stay in bounds and is it fair to say realistic?
Yep.
Right. Unfortunately, there's videos, and I'm not saying this guy was all the way there, but when I hear you can literally put $100 to $200 a month in and get $1 million benefit, I said, dude, you ain't even talking about a whole life policy for an adult. For an adult. Now, for a kid, if you're taking out whole 100 and paying for the cost of insurance, you might be scratching $1 million. You know what I'm saying? No cash value at all for a long time. You might be scratching at $1 million, but depending on the product and carrier. And
we're not even talking about risk.
Right.
Yeah.
So let's lean into that. It's based on age, based on health.
Yep.
Right. And it's based on gender.
My boy Nick, I'll give him a shout out. My boy Nick Ray in Arkansas. I'll say his name. That's my dude, man. He said this a long time ago, probably like 2015, 16, when I first met him. He said, money doesn't buy insurance. I kind of looked at him. He said, no, your age and health does. Money don't buy insurance. Because you could literally be sick, have all kind of chronic, critical, terminal kind of stuff going on, and have $1 million to put into an insurance contract, and they will deny you.
Yep.
Yeah.
So your money don't matter. It's not priority. It's like third on the list or fourth, right? Age, gender, health, then money. Right. So, so we got to be careful. So if you're watching us guys and you're, on social media all the time and you're learning about this stuff, can you learn good things? Yes, but just be careful. And if you're looking to plug into something, take it a step further and talk to someone to verify the information, right? To maybe help you correct some of the information, guide you in the right way. Find someone who's been doing it for a minute. Find an organization that has the expertise, that has back office support, that has the experience in doing this for a long period of time, that can actually explain the tax codes to you and why they work the way they do. They can actually explain how to design them the way they should be designed if you're looking for cash value accumulation. Some people, honestly, they're not Woods.
Yeah.
They're not looking for that. They're building their estate from a death standpoint. I want to make sure when I get up out of here, I want $3 million to go to my family. I don't care less about the cash value. I literally had somebody tell me, I don't care about that cash value. I don't want a term because that's going to, if I live, which I think I will, my family lives to, in their 90s. I don't want to be, without insurance in the term end. So I want to have something permanent. But I want this number because we got to pay the house off. My wife got to do this. My wife got to do that. So I care less about that. Give me a permanent life insurance policy, IUL, whole life, whatever the best deal is in that sense. But I've got to have this death benefit. Okay, cool. So Travis, are we going to build the Lamborghini like this guy's talking about for that guy? No.
No, that'd be more like Cadillac. That's
Yeah. Give him a lack, and a gold medallion match.
Fleetwood. Give him a Fleetwood.
Yeah, give him a Fleetwood.
There you go.
I don't know if I said this in this podcast or a previous podcast, or if this is a discussion between the four of us here.
Yeah.
And a lot of people might be like kind of questioning, like discerning, like, oh, Mondo, when should I get like a term policy or when should I get a whole life? And I've always said it this way when you're trying to discuss between the two policies, is that a term is for if you die, and then a whole life policy is for when you die. And those are two really, really big statements.
Yes.
And the way we usually see like term goals is term is really protecting you from debt necessarily, where a whole life is really trying to give you a legacy. So for instance, the way I look at it, like, all right, let's just say you had a house mortgage payment for 30 years. Your mortgage is 30 years. Then I would say then you pull out a term policy for 30 years. That way, if you die within those 30 years, that is covered. If you get a car note for 5 years, get a term policy that matches it. That way, if you die in 5 years, that debt is paid off and you're cleared. Now, whole life is for when you die, because we don't know, like for term, there's a set term, right? 15, 25, 30 years. But then I'd like to ask you, when is your death date? Don't worry, I'll wait. Right? Where whole life is for your whole life, right? It's when that time comes, you're covered. And that's the way I kind of like discern between the two. So if you're ever having kind of like questions on how, like when or how, always use that kind of framework, and that'll be a really easy way to kind of justify between the two.
That's a great point, man. I had a conversation with a young lady yesterday. She's in her 30s. Phenomenal client, man. And we were talking about what you're getting into, assigning a purpose to the policy.
Yeah.
So, and what I mean, a lot of people come into insurance and they say, I need to get me some insurance, right? I guess that's just a sassy woman. That's how they sound. I don't know why I did it like that, but whatever. Okay. I need to get insurance. So I just need to get some insurance. That's the right thing to do. Yes, you're absolutely right. But when you don't assign it a purpose and a meaning, like actually use it to plug a particular hole in the ship, it doesn't hold as much weight when it's just something you got on the shelf. Assign it a purpose. To AJ's point, you can get a term that's specifically to cover the mortgage if you die before the mortgage is paid off. Period. You get other types of policies for what? You can get one for income replacement for the spouse. You can get one to build a retirement for yourself. You can get one that way. Okay, well, I want a term for, if I die early, the mortgage paid off, let me get another one. So that way, if that happens, it'll cushion my wife's pocket to be able to transition well. Okay, cool. Let me get another one, like maybe one for cash value accumulation, building wealth. Let me get this one to build a retirement for myself. Let me get another one to build a tax-free retirement for my wife. So you're actually assigning purpose.
Yeah.
Right? Silly example. When you go get shoes, you typically have a purpose in mind when you go get them. You're just going to say, I'm going to go get shoes. And next thing you got New Balance on Sunday morning at church. Because you just went to get shoes versus, or whatever, I'm going to go get some shoes and you go buy some baseball cleats. And you want Monday morning at work with baseball cleats on. You know what I'm saying?
You wear some Timbos in the hoop court.
You walking into your cubicle, click-clacking and with the cleats on. It's like, because you assign your shoes a purpose. Same thing with insurance. And I really try to help. I know all of us do. We try to help people really look at it that way. And it's a dark thing to think about. You think about it for a couple hours or a week to just get everything in order, so your family doesn't have to deal with it for the rest of their lives. Mm-hmm. So what is that thing that they might have to deal with? Go point it out. Okay. House, debt, student loans, right? Maybe transitional money. Maybe your daughter or son is a single parent. Whatever. Retirement for the spouse. This, that, and the other. Plug all those holes. Maybe you have a child with special needs. Maybe you have a lot of children in general. If something happens to you, your wife or your spouse is going to need extra money to make sure to keep the boat afloat, raise these babies. Whatever. Think about all the old crap, what the hell moments that could happen, and fill those, reverse engineer, bring it to your face, and that's what you get. Versus, I'm gonna just get some life insurance, Larry. Can you help me with that? Because it's the right thing to do. Am I making sense, man, or am I crazy? Like,
Total sense. That's the approach that should be taken for everyone.
that's what I think. I mean, because if that's the case, you're not gonna let it go. You're not gonna put, the July 4th ribs as a priority over paying your life insurance premium.
Mm-hmm.
You're not gonna let it go. You're going to figure out, especially if you have a whole life of some sort, IUL, whatever. Man, I can make the legacy even better if I do the strategy that the guys at AMG taught us. Man, we can grow this thing. Man, they even said that. Let me call them back. We could start. What'd you say, Larry? Like start with some cash flow assets. You pull some money out. I mean, this guy was right about that, right? In the video,
Yeah.
he was right about that. That's part of 50. He was right. You could put, withdraw or loan, do whatever to take it out, produce a cash flow asset, and then put the money back. Blah blah blah. Show you how to dance. Show you how to drive the Lambo.
Mm-hmm.
Show you how to drive it. I love this, man. So we give our man a 50 piece, right?
Yeah,
He's like, wasn't all the way wrong, wasn't all the way right. There's definitely more to it. AJ, what are you gonna say, man?
So Mondo, so let's do this. I think this might be fun. So with this type of video, I want to ask you, how would you revise this and make it fully functional? If you're going from step A to step Z, from how he presented it, but how would you actually factually correctly present this?
Wow. All right, cool. No pressure, fellas. Thanks, AJ. So,
Put him on the spot.
man, that's a great thing. And I'm sure people watching are like, yeah, I'm glad he did that. All right, cool. So here's what I would suggest. So I think a very powerful strategy, regardless of your income level, if you can afford wherever you are to get into a trust, do it. To put your family within a trust, your assets, all your belongings. That way you own nothing and control everything. Okay. And we can explain that on a consultation if you don't know what that means. But it's putting everything in the ownership, protecting you and your family from a lot of different things, litigation, probate court, you name it. It's a lot of protection, lawsuits, whatever. Okay. So one of the first assets you could put in there, to this man's point, is to put a life insurance policy in there. Okay. Now, how much of a life insurance policy? It depends on your age, your health, your gender, and also your financial situation. And you couple all that and put it with the fifth thing. What are your goals? What are you looking to do? Because based upon those 5 things, you could take 5 people asking those 5 things. It's going to put them in almost 5 different directions. Okay. 5 different customized Lambos. Okay. So now can you start with $100 a month? Yes, but we'll show you how you need to establish your expectations and how you need to view this thing. If you have a little lump sum because you inherited some money, maybe you've been saving up or whatever it is, maybe you just have money in general and you want to start off with 20,000 a year. You want to put 100 grand in a year. We have clients doing that. Okay, we'll show you what that can do. And that opens up strategies and more features on the Lambo. Okay. When you're putting $100, $200, $300 in, all that lower, and you're doing it monthly and not annually, you have basically the standard basic Lambo model. Okay. You may not get the Bose system. Okay. You may not get the touchscreen, everything, but you got a Lambo. Okay. And it has potential, great potential. Okay. Still fast, still has a lot of features, but you can, based upon all those 5 things, we can put you into a contract, pending all 5 of those work out, finding the right strategy that meets you and your family, put the owner as the trust. So the trust owns the asset. You're a trustee. So you are the controller of that asset in that trust. All right. And whatever your goal is, if you're looking to stack cash, if you're looking to store money away, if you're looking to use this cash value column aggressively to go pull money out in a loan and leverage it for building cash flow assets, we'll show you how to do that. Some people don't want that. They just want to put it there and set it and forget it. Put some gasoline on that thing and let it grow. If that's you, definitely contact us and get some expert advice. At this particular point, if you're watching my TikTok video or whatever, get off of here, book a consultation, and we can fill in all the gaps. This is too, you can't describe the way a Lamborghini works in 30 seconds. Right. You just cannot. Mm-hmm. So if you want to learn the details and how it will be catered to you, put in your lap with your health, your age, your funding, your gender, and your strategy, contact us. We'll be glad to help you. That's what I was saying. That's way longer than 30 seconds. But that's what I would say. Because that's the truth.
Yep.
That is the absolute truth. And it is not, for the record, we said in a lot of different ways, but let's make it plain. This strategy this young man's talking about is not a get-rich-quick scheme. And if somebody makes it sound like it is, they don't know what the heck they're talking about. It is about building wealth. What's the key word I just said there, AJ? It is about
building.
Build.
Correct.
So you're saying the quit your job, $50,000 a month? That's not
okay. That math ain't even working. What are we talking about? I'm gonna get on this dude for a little bit. $100 to $200 a month, and now I got 50K. What are we talking about, man? Yeah. Quit lying to people.
Yeah. And the one thing I hate, they make it seem like, okay, even if, let's just say, for instance, even if you have your policy max funded and you put a boatload of cash in to be able to loan against, buying rental properties, buying businesses, and it's not as easy as people make it out to be. Like, it's not just you just go buy a rental property and all of a sudden now you're cash flowing and you're chilling, right? You have different things you have to take care of because then it's its own separate business. Then to go and buy another business, it just doesn't work like that, right? Unless you're just a superhuman that is this either like extremely business acumen, or you have a team that actually works this phenomenally, right? So right. It's not as easy as, again, like you said, like TikTok makes it out to be, or Instagram Reels makes it out to be. There is still a lot of hard work. You just don't retire on the beach and just chill.
Yeah, and that's interesting you say that, man, because to your point, I was thinking as you were breaking that down, I was like, yeah, that's so true, man, because let's say, you had 20,000 in cash value and you pull out 15 and you go put a down payment and you get a rental property. Okay, so you loan out of your contract from the insurance carrier. They give you $15,000 in resources leveraging your death benefit, right? Your cash value will get it back from death benefit. You take that 15 and you go buy a liability. Mm. If you, person, don't have the experience or the instruction or people around you that can teach you how to take that 15 that you just bought a liability with and flip it into a cash flow asset, don't listen to what this dude talking about.
Mm-hmm. I mean, especially during a time that real estate agents and, developers aren't buying.
Correct.
Bro. When the market's low and everybody's like, oh, there's so much potential, but I think to the point of that you're making, AJ, too, like, it takes a lot more effort, but it's the same even with people that are watching social media. Because to be honest, there's a lot of people who are going to watch it, like it, feel a certain type of way in their mind, be like, I'm going to do that, and then keep watching social media in 30 minutes, forget what they, said themselves they were going to do. I think if you really want to get serious about your money, you have to take action. And I think, Mondo, you mentioned that they need to book a consultation. I mean, that's a part of the action. You have to book with somebody. You have to talk with somebody. You have to go through it. Yeah. You have to figure out what you're working with, and understand the reality behind what it takes to leverage your money. You can leverage your money to make more money.
Right.
That's absolutely true. Wealthy people do that all the time, but wealthy people are also usually starting with a trust fund that their parents gave them and a lot of assets already. So when they're, opening another trust or opening these accounts, they're opening it from a different place of leverage. And so if somebody's broke, to that man's point, and trying to get into this, you have to understand how to really leverage a lot smarter in the beginning.
Yeah. These policies aren't called Captain Save a Bro policies, where if you're broke and homeless, we can save you. That's not what these policies do. You know, here's what's interesting, man. I have certain clients that I'm gonna keep it about, man. I have certain clients that learn by having human interaction and being educated and humbling themselves to learn from experts in the field. Okay. I have other clients who are on that path. They're headed there. They come from learning from hearsay. But they're now like, that hearsay ain't been working. So let me go find somebody to talk to.
Yep.
Then I got that group of people. Then I've got the other group of people who the gospel is TikTok. And I'm over here defending the industry and the product against what they learned in TikTok. Ain't talked to nobody. Ain't talked to a soul. Just been intaken with the thumb going up and down. And then bring that education to here and want that to work here. And you see the pickle?
Yeah.
And I have a heart for this individual because it's like, man, if you only were willing to humble yourself and say, you know what, I heard about it, but I don't know about it. Can you teach me? I don't know if everything I'm hearing is true or not, accurate or not, but can you help verify or debunk and educate me, put me on the right path so I can understand what this is? That way I can truly determine if it's for me or not. That's what I encourage people to do. I know we all do that. We've been on conversations with people with all over the map.
Yeah.
Right. And so that's a big part of it, man. It's wealthy people, high net worth clients that we have, they don't listen to critics with no credentials.
Yeah. Seek consultation, not advice.
Right. Right. So there's nothing wrong with asking questions. There's nothing wrong with saying, hey, you know what? I've never played in this field before, but I'm willing to learn because I want to play. And that's what we encourage you to do. You know, you hear our conversations, we're, talking about different things and our perspectives, some truths and things like that. And I really encourage to reach out, DM, message, email, whatever. We'll put all the stuff in the description of how to reach out and find us to have your conversation.
Ask questions.
Ask questions, your conversation, because it is a process in teaching you how to drive a Lamborghini. It's not just handing you the keys to the Kia and saying, hey, have a good time. Okay. It is a process. So, if this is new, so whatever, we encourage you to reach out, man. We're here. We're available. We've got webinars. We've got consultations. You can meet with all of us. You can meet with one or two of us, however you want to cut it. And you can email us. So we'll put all this stuff in the description below. We'll make sure it's there, AJ, so we don't have this great conversation. They're like, I'll find these dudes. All right. So with that said, guys, you want to leave with any parting words for our wonderful people who are checking us out today?
Yeah, if you did love this video, definitely would love for you to comment. What was your favorite part? What did you learn new? Again, if you have any questions, definitely drop them down in the comment section too as well. We would love to reply to them.
Love it. Trav Woods, you got anything to offer before we roll out?
Yeah. I'll just say educate yourself on the product, because the product is customizable. Your situation of what you want the policy to do for you, it could be totally different from the next person. So being that they are customizable, consultation is extremely important.
Love that. Love that. How about you, Trav?
Echo that. What Wood said. It's customizable. Man. Find your route. Find your way.
Love it. Awesome. With that said, thank you guys for being here. Fam, we'll see you on screen talking about you and your business. If not, we'll see you on the next AMG podcast. Y'all have a good one. Peace.